Good morning. US share markets were closed on Monday for the President's Day holiday. Stocks posted small moves amid muted holiday trading after Friday's benign US inflation data reinforced expectations that the US Federal Reserve will cut interest rates this year. Futures tied to the Dow Jones Index rose by 37 points or 0.07%. S&P 500 futures edged up 4 points or 0.05%, and Nasdaq 100 contracts slipped 56 points or 0.23%. US government bond markets were also shut on Monday with no cash trading of US Treasuries. US 10-year Treasury futures were steady after US yields touched their lowest level since December on Friday. The US 10-year Treasury yield last traded at 4.05%, with the US 2-year Treasury yield at 3.41%. European share markets edged higher on Monday as financial shares rallied, with investors turning their attention to a busy week of corporate earnings that could shed light on the health of corporate Europe. The continent-wide FTSE Euro First 300 index closed 0.2% higher, with Europe's main benchmark 600 stock index inching up 0.1%. Spain's bank-heavy benchmark IBEX 35 index led gains among regional markets on Monday, rising 1%. Germany's DAX index dipped 0.5%. European shares hit a volatile patch in late January and through early February on worries that newer artificial intelligence tools could squeeze profits of traditional businesses. However, a better-than-feared earnings season in the face of steep US tariffs helped the Stoxx 600 index to touch a record high last week and log its third straight week of gains. So far, 60% of European companies have beaten earnings expectations, compared with 54% seen in a typical quarter, according to data compiled by LSEG. Further, earnings are expected to have fallen 1.1% versus about 4% drop earlier in the month. On the economic front, Eurozone industrial production rose 1.2% year on year in December, down from a 2.5% increase in the prior month, at a time when investors are anticipating that fiscal stimulus measures are reviving the sector. European banks and insurance stocks had been mired in AI disruption worries last week, with the lenders index logging its biggest one-day drop since late March 2025. On Monday, lenders bounced back with a 1.4% rise, while insurance stocks added 0.7%. The rebound in heavyweight banks offset weakness in technology and luxury stocks, which dropped 1% and 1.9% respectively. Shares of French software company Dassault Systems declined 10.4%, driven by investor worries over the company's challenging 2029 revenue and cloud targets. Basic Materials shares were also down, losing 0.6% after their recent strong run. London's FTSE 100 index ended higher on Monday, up 0.3%. Defence stocks added 2.5% and led sectoral gains after a report that the British government was considering bringing forward its target to spend 3% of economic output on defence. The Munich Security Conference over the weekend also highlighted the need for greater military cooperation within Europe at a time when US policies have upended the global world order on security. Meanwhile, British banks NatWest and Barclays added 4.7% and 1.5% respectively, tracking a broader recovery in European financial stocks. The FTSE Industrial Metals and Mining Index ended down 0.6%. London-listed shares of Rio Tinto lost 1% after the mining company suspended work at its Simandou iron ore mine in Guinea following a fatality at the Simfer project late on Sunday. Ahead of its latest earnings update on Tuesday, BHP Group fell 0.7%, while Glencore, which had been set to merge with Rio Tinto until the tie-up was abandoned early this month, also lost ground, falling 0.3%. Fresnillo retreated 1.1%, and Anglo American was down 0.2%. Eurozone bond yields traded at their lowest level since early December on Monday, falling for a six-day trading session at the start of a week packed with key economic data. German 10-year yields fell 1 basis points to 2.75%. It was the longest winning streak for the benchmark since the Eurozone from late November 2024. Money market bets on a European Central Bank rate cut by December eased slightly after having risen to a roughly 40% probability after Friday's US inflation data. German two-year yields, which are sensitive to interest rate expectations, were last little changed at 2.05%. On commodity markets, global oil prices edged up on Monday as investors weighed the market implications of upcoming US-Iran talks aimed at de-escalating tensions against a backdrop of expected OPEC plus supply increases. The global benchmark Brent crude price settled up 1.3% to $68.65 a barrel. The US NYMEX crude price last traded at $63.73 a barrel, up 1.3% from the prior day's session. The gold futures price slipped 0.7% to $5,013.10 an ounce in after-hours trade on Monday, as key markets in the US and Asia were shut for holidays, while a firm US dollar put pressure on bullion. Spot gold was last trading near $4,990 in late North American trade. Copper futures fell 0.3% due to a firmer US dollar and a focus on rising inventories and weak demand prospects in holiday-thin trading. Aluminium futures shed 0.8%. Iron ore futures dipped 0.1% to $98.6 a tonne in Singapore trade on Monday. Most Chinese steel mills will be shut down or undergo planned maintenance for the week-long Lunar New Year holiday in China. Australian shares are poised to open modestly higher on Tuesday, with a focus on results from BHP, Challenger and SEEK before the market open. According to latest SPI futures, the ASX 200 futures are expected to open the day up by 16 points or 0.2%. Australia's corporate results season ramps up this week. On Tuesday, global mining giant BHP, Challenger, Judo Capital, Macmahon Holdings, Reliance Worldwide, SEEK and Sims are all scheduled to release earnings results. For the half year ending 31 December 2025, market analysts expect BHP's underlying profit to come in at $6.22 billion. Net income of $6.25 billion is estimated, with underlying earnings before interest, taxes, depreciation and amortization, or EBITDA, of $15.09 billion. The interim dividend per share is forecast to be 65 cents. Attention then turns to the RBA's temporary home of Chifley Square, 11:30 a.m. Australian Eastern Daylight Time on Tuesday, when the Reserve Bank of Australia's latest monetary policy meeting minutes are issued. The RBA board raised the cash rate target by 25 basis points to 3.85% at the February 2-3 meeting, in line with consensus expectations and the forecast of Commonwealth Bank economists. The rate hike decision was unanimous across the Reserve Bank's Monetary Policy Board. In the statement attending the decision, the RBA noted that inflation pressures picked up materially in the second half of 2025, private demand has strengthened substantially more than expected, and capacity pressures are greater than previously assessed, and there is uncertainty around whether financial conditions remain restrictive. Looking ahead to the minutes released today, Commonwealth Bank economists will be looking out for three aspects of the decision. Firstly, the board's conviction on the RBA's revised assessment of key macroeconomic variables, including a significantly larger output gap. Secondly, factors that would compel the board to deliver further interest rate increases. And thirdly, the potential pace at which these increases may proceed. When Wall Street reopens on Tuesday, Constellation Energy, Medtronic and Palo Alto Networks are all expected to issue earnings updates. The Federal Reserve Bank of New York is scheduled to release its February manufacturing survey, with the index expected to ease to 6.2 points from 7.7 points in the prior month. The US dollar index, which measures the currency against six major peers, rose 0.2% to around 97 points on Monday after dropping 0.8% last week. The Australian dollar dipped from 70.96 US cents to 70.67 US cents and was last near 70.75 US cents in late North American trade, hanging just below the 3-year scale that it reached last week. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great day.